That's it. I finally found one. I'm super excited. A top crypto exchange that allows you to trade from pretty much anywhere around the world. The spot market, so that's actually buying and selling the asset, the coins, but also the futures market. So those are perpetual contracts where you can do longs, so betting on an uptrend, and shorts betting on a downtrend with or without leverage. And all of this is valid whether you choose to do KYC or not. And this also includes North America and the UK, where I know regulations tend to be much tighter. In fact, they do have a license in the US. And I think that pretty much explains why they're quickly cranking up in the top crypto exchange in terms of open interest and things like that. They are open with their proof of reserves, which is super important. And another important thing for me is that their API is available, so I can start coding and automating my trading via very nice little Python codes, etc. So that's great. Okay, I know that's quite a lot to take in. And actually today we'll leave aside the part of automated trading, Python trading bots, strategies that we generally talk about and share open source on this channel. I actually want to show you today how easy and convenient it is to trade on this platform. And also, so if you're a beginner, you'll get the basics about trading cryptos and all of this. But also more than that, I've been testing a lot of crypto exchanges with all my algo trading endeavors and all of this. And I want to use this opportunity to also highlight a few points that I find super nice about this crypto exchange that you don't necessarily see on a lot of them. Anyways, let's go. So first, let's get into the real deal. I want to show you the practical stuff, how to trade, how simple it is to trade. We'll keep the registration, depositing money, all of that for a bit later, transferring funds, etc. But that's also the first point I want to make that I like a lot about this platform, is that it is simple. Simplicity is super important for me. You see, buy crypto, markets, futures, spot. I want to trade spot. I click here. I get to spot. Futures will look very much the same. I have the coins here. I can click them or search them. I have my order book here, and I have here how to place market and limit orders. Super simple. I don't have to scroll through a lot of stuff, etc. That does annoy me. When I open my account, I want to, in a few clicks, be able to trade, and that's it. Also, by the way, check these things out if you ever register. That's where you can get some free cash easily by depositing and trading a bit. Anyways, actually, while we're on the topic of bonuses, and let me highlight another point I like a lot about BitUnix, is that they offer very competitive trading fees. And more than this, their VIP scale you can level up in, you can actually do that quite easily. You can see VIP 1 here. Typically, you can access it by depositing 1,000 USDT. And if you do that, the fees that you get are very competitive. Typically 0.05% on the futures market as a taker fee. So when you do market orders, it's better than what I know of most crypto exchanges. So that's really cool. But I need to add to this that I've secured 2 very nice deals with BitUnix. So if you register with the link down below, the registration link I've put in the description, and open an account, you will get a 10% discount on your trading fees. So on top of whatever VIP level you're at. And that for spot and for futures. That might not sound like a lot, 10%, but if you know about compound interest and all of this, in the long run, it can make a big difference. What you see here, please, if you ever register, go see those welcome bonuses and all of this so you maximize everything that you can get. But the other deal is not shown here. It's a short-term campaign where lasting 2 weeks, that if you register with my link, you will get a deposit training bonus on your deposit of 10%. So if you deposit 100, you'll get a 10 USDT training bonus. If you do 1,000, you'll get 100. You must do 1 trade. But I'll put all the conditions and everything in the description down below so you're aware of how to get all of this. I also want to mention that if you use this registration link to open an account on BitUnix, you're also supporting this channel a lot, because it means that not all your trading fees will go to BitUnix. A bit will come back to me, which is a huge help, a huge support for my work and creating all this open source and free content that I share and develop on this channel. So I want to say thank you very much if you do use that link. Anyways, enough chitty chatting. Let's get back to business. So you know what? Let's do a market order. So what is a market order, by the way? That means you're saying, I want to buy or sell exactly now. As soon as I place the order, I want it to be executed. So this will be done at the current market price that you see here. So typically, it's very simple. Since you don't have to set a price, you just say how much you want to buy at right now. So I could do like 25%, or you could type it, no problem. If I do buy BTC, you will see that we have our order that was placed here, and we actually bought that amount of BTC. And you can see it actually here that I indeed have it in the form of BTC. So you know what? We could just do a sell. So we'll do the reverse. I'm now just going to sell all the BTC that I just bought. I'm just going to do sell BTC, and we should see a order place. There you go. So now the other type of order that is the limit order. So here you're now saying you're giving a price. So you say, I want to buy or I want to sell if and only if the price hits the target price that I want to set. So typically this is where you give this target price. So let's do an example. Typically, so here we have BTC around, let's say 101K. I could tell myself that I would be happy to buy some BTC if it ever came down to 95K. So I put 95K here. Let's do again 25% for the example. So there you go. And then I can just do buy BTC. So actually it is said buy BTC here, but it means open that order. And you can now see that you have an open order. So you have not yet bought the BTC. You have placed a limit order saying that, and you actually see it here, this limit order, that this will be only executed if the price of Bitcoin comes down to that level. So that's really where you want to control the price. And if it never comes down to that level, then you would never buy the asset, the crypto. There you go. So that was for a buy. You could do the same for a sell. So probably if you had Bitcoin and some Bitcoin in your portfolio and you're like, oh, if it goes to 105K, I would be happy to sell my Bitcoin. You could place a limit order just the same way here. And finally, maybe I should show you, you can, if you ever change your mind, you want to remove that order or whatever, you can simply cancel it here. But I was too slow, but there was also a cross here where you can cancel from there. Great. So now let's spice things up and actually move on to the futures market. So I can highlight some of the nice things that I like about this platform on that market. Let me say also at this point that I'm not a financial advisor. This video is not financial advice. This is just about me sharing my enthusiasm, my work, my experiences, opinions, etc., as I do in this channel. But keep in mind that trading is very risky and you can lose all your money from the money that you place into this. And I want to also mention futures is a market where you have more flexibility, liberties, freedom, but that comes as a cost there where the gains can be higher, but the risks are higher. You can borrow money, etc. So by the way, I'll also use this opportunity to just do a quick crash course about the important things I think one should know when starting to trade the futures market. So number one is the type of positions that you can do, and actually the concept of position. On the spot market, you buy the asset and then you detain it. I buy Bitcoin, then I have Bitcoin in my portfolio. On the spot market, on the futures market, beg your pardon, this is different. You bet, you then hold a contract on the underlying asset. So a long position is a bet where you enter a position and you hope, well, or your strategy tells you that there's a high chance that the price will go up, so that if I close the position at a higher price, I will benefit, gain money from that difference between the opening price and the closing price, proportional to the amount of money you placed in the position. And the short will be the opposite. You're making a bet on a downtrend. So if you enter, the price goes down, then and you sell, then you'll get cash, you'll get money, you'll win gains from that difference. But if it goes up, then that's a loss. Okay, so great. So that's number one, the type of position. The other very important one, and that's where a lot of the risk comes in, is leverage. And the third point is margin mode, but they go together hand in hand. So leverage is you're borrowing money. So basically what happens is that if you're on a leverage of 1, you're not borrowing any money per se. So if you enter a position with $10 and your leverage is 1, the size of your position is $10. But if you do with a leverage of 10, then that means that you pay $10, but your position will be opened as for a value of 100 USDT. So your $10 is what you call your initial margin. So what happens with that is that you have a liquidation price that comes into play. Because the exchange is lending you money, it wants to make sure that if your bet goes the wrong way and you're losing, well, when it gets to losing, it actually closes the trade and you lose all your money of the trade, because that's the security for the exchange. So liquidation is super important, but liquidation can happen in two different ways, and this depends on your margin mode. So isolated is what I consider the safest, and I would recommend to any beginner to go for isolated mode. Why do I say this? Is because what can be liquidated is only the trade. On cross, it's different. The margin is shared across all your portfolio, meaning if your liquidation price of the whole portfolio, your whole portfolio drops because of your positions to the liquidation price, your whole money vanishes in one go. So you lose all your portfolio. That's the cross. Isolated is just the position. So you enter the position with a given percentage of your portfolio, whatever, you did a bet, it went against you, you had liquidation, you lost the money on that trade, but not all the rest of your money on your portfolio. So that's the big difference, very important, between isolated and cross. Leverages as well. I personally never go to very high leverages, even in my trading bots. These, when you go to crazy leverages like this, actually, I'll show you an example. I'll show you an example right now. I'll show you an illustration. So I want to go back to 2. Okay, it's still 2. So you know what, to show you these liquidation prices, we'll do a market order, and let's start with opening a long. So I'm betting on the fact that I'm hoping that this is hypothetical in this tutorial I'm just showing you, but the idea behind is that I'm betting on the fact that the price will increase so I can then close it and make some gains. Okay, so market, I'm going just for the market. You can see that you have limit. You also have some more advanced orders. You have trigger here. You also have trailing stop, but let's stick to limit for my example. Okay, so I'll just put, I'll open with all the capital I've put on this account. So there you go. So what I wanted to say is that now you see here my liquidation price. So this is the liquidation price of my position. If I entered it, the liquidation price will be around here, the instantaneous one, and that will be for a short. So here is the long, here is a short. So you can see I have quite a lot of room to, like now it's 101K. There's quite a lot of room. By the way, it's pumping a lot since the beginning of my recording of that video. Okay, great. So anyways, so there is a lot of room. Now, if I go to, I'm just going to go crazy. Let's go to 125, confirm. Now you can see there's just a couple hundred USDTs difference before I could get liquidated. So a little volatility spike, liquidity, little liquidation of other people, a little spike, a big wick on the candle, and you're liquidated. So you do what you want, but I don't go too crazy. I don't understand why people do crazy things like this. But anyways, so you know what? Let's carry on with this example. The other thing I should say is that obviously you don't need to live in fear of liquidation and things like that. You need to use risk tools, risk management tools, and putting a stop loss or a take profit are part of these. So here giving an example right now of opening a long. So I'm going to open a long with 100% of my quantity. It's a market order, so it'll be at the market price when I press open long. And I'm attaching some buy TPSL because I'm opening a long. So I want to say if the price, I don't know, let's say if the price goes up to 105K, I'll be happy to take my profits. So that's the TP I'm setting here. Now, on the other hand, I want to avoid any liquidation or avoid losing a lot of money if the price goes down. So my margin, let's say my level that I'm happy with, let's say I'll keep the position open if and only if the price never comes down to more than 95 or 95 or more. And something I wanted to mention here, I like this a lot. This tells you this little sentence basically tells you, given the position size that you're entering, the prices that you set by SL, how much you would gain if your TP is touched, how much you would lose if your take profit your stop loss is hit. So you can see here my stop loss is quite far from the entry price, so I'm losing quite a lot. So maybe if I didn't want to lose so much, I should put something like this. And maybe I think there's more power in the uptrend, so I put a looser take profit. And as you can see, these are here, but indeed the take profit would only trigger if the price hits it. It's not, you're not sure about that. But anyways, so I've set all of this. Let's open the position. Okay. And you can see I have that. There was a little sound that told me that that was opening. And there you go. You have your position. Your long is now opened. You have entered your position. See long isolated times 2. Great. You have some information here. But what I want to show you is that you see in open orders, you also have you can see TP market, SL market. Those orders are attached to that position. And as you can verify here, you are indeed, if this is your take profit and stop loss, the side is indeed of closing long. So if your TP level is hit or your SL level is hit, you will be closing the long. That's exactly what you want. Great. You can modify. I think you can also, you can also modify your SL take profit levels from moving them around, and you have some little nice notifications. Great. So there you go. So you know what? Let's actually close. I'll do a flash close, and that means flash closing directly. Okay, let's do that. So you could open and close a position, put an order to open a position to close, but I'll just do one last example to open a short because I want to, so let's do that. There you go. So you can see now the liquidation prices. That one, but if you want to set a take profit and stop loss for your short, just remember it's a sell TPSL, not the buy TPSL that we use for the longs. So let's go. So now the other thing, you're betting on the downtrend. So your take profit would be lower than your entry price. So now let's say I would be very happy with exiting my position, taking my profits if the price of Bitcoin went down to 90K. There you go. So, and therefore the stop loss is on the other side, it's now upper. So if the price goes up, you're losing. So you want to limit from above. So there you go, 105. That will do. Open short, confirm. There you go. So we've seen how to trade in practice and things like that. But trading is not just about that. It's also important to know how to track your performances or what is going on with your money, how you're managing it. And that's another nice feature that I like a lot about BitUnix is you can quickly find a P&L analysis. If you come here, so I went on futures, but you can do the same with spot futures. You come here, you click here, you get to a simple P&L analysis telling you if you're accumulating gains or not, etc., which is super important if you're trading a lot of coins, or maybe you have a lot of strategies, some trading bots, all of that can get hard to track what is going on, but it's important that you can. So with that, you can do that easily. And I think that's great. Anyways, so we talked about registration with the link. You remember the bonuses, all of this, if you use the one in the description down below. But beyond this, I just wanted to say, you just do that, give your email, password, do the verifications, etc. And it's after that that you open the account, but it's after that that you choose whether or not you want to do KYC. That's up to you. But what I wanted to mention here is that no matter which of which you choose, please do at least a 2FA security. It's super important. It's the basics. Please do that. Anyways, there's something else that I wanted to mention to make this tutorial complete. You can buy crypto very easily with BitUnix. You can come here on buy crypto. You choose your payment method, the third-party payment provider. You see, you can do credit card, bank transfer, Apple Pay. It's super easy. You put the amount that you want to buy and you just buy, and there you go. The other thing is maybe you have another exchange, you already have some cryptos or things like that, so you could want to deposit. Actually, you just simply come here and click on deposit. This will open this page here where you can deposit cryptos. So you select the coin that you want. Okay, let's say we want to deposit USDT. Now, here's one thing if you're a beginner or you're not too used to this. This procedure is pretty simple. There's just one thing that you need to be careful of is the network that you're using to transfer those coins. So typically on the account or the wallet or whatever that you want to withdraw the coins from, you will have generally a set of networks that you can choose, and each of them have different times of execution and also, quite importantly, fees. So just make sure the network you selected on your on the wallet that you're withdrawing, you're matching it. They both are matched with the one of the deposit here. So if you're saying I'm gonna withdraw with Arbitrum 1 on that other wallet or other exchange, make sure you come here on the deposit and put Arbitrum 1. So that now you copy this address and you put it on the withdrawing page that you're using. Great. So I hope that was clear. If it wasn't, I was trying to simplify and I feel like I made it more complicated than I needed to. Anyways, comments down below if you have any questions, or the community Discord. The last thing I want to point out is how to transfer funds between spot and futures, because when you will be depositing funds or whatever, or buying them, it'll come on your spot account. But if you want to go to futures, so you remember you come here, futures. But so if you want to transfer, you just come here, transfer. So you see spot account to USDTM account. That means futures account. It means it's futures where the margin coin is or backed by USDTs. So there you go. So you put your amount, whatever. That's great. And it's super easy. So there you go. What I'm going to do on my side now for the future videos is I'm going to work on some Python codes to automate trading on BitUnix and create trading bots and things like that. Anyways, happy trading, take care, and see you soon.